Oh man, pain, and more pain for this crypto market, which now sees Bitcoin fall below $20,000. Thank you guys for joining me for a live stream. This is an unscheduled live stream, but I thought I'd jump on with you guys, cover off some of your questions, and sit in solidarity for you. If any of you are following me on Twitter, I tweeted to the extent that I'm not leaving. I'm not leaving this crypto space. I've been here too long. I've seen too much. And I am not leaving. Let me just share that tweet with you guys so you can see I'm not leaving. And we're going to sit here. We're going to look at all the FUD. We're going to break down the key levels. But one thing is for sure, we're not going to sit here in denial. This market looks bad right now. And I'm going to give it to you straight. I shared this with you a few months back where I said, guys, this could be very horrible if Jerome Powell gets it wrong. Now, between then, we saw clues that Jerome Powell may have figured this out. But the last 4 weeks has reminded markets that Jerome Powell's not in control. And the reason we're seeing a lot of pain now is Jerome Powell's comments at the testimony a couple of days ago just iterated it from himself, where he's basically saying, yeah, I don't know what I'm doing. I might have to do 50 basis points, right? So this could, and I need to be very clear, lead to a painful period. If you remember around December time, before this rally, I was preparing you guys for a potential painful 2023. And I said that this is going to be a painful year. Get ready for your DCAs, get ready for your accumulation, get ready for stop-start, and so far 2023 has been true to that nature. Now what gave me that idea? What gave me that idea was if we mess this up, if we cannot bring inflation down, if we have entrenched inflation and if GDP starts to slow down, we have unemployment, we could be leading this economy to stagflation. Now, this is where it becomes worse than crypto, because then you start to see banks be in trouble. I covered off Credit Suisse towards the end of last year. They're in trouble, right? I still think they're struggling from liquidity. And now, do not be surprised to start seeing more issues around liquidity, because this is a bigger problem than just crypto itself. Yes, crypto has liquidity issues, but there's bigger issues more globally as well. So this could be a very painful period, and we have to be prepared for that. And if you're not in it for the long run, this could be a very, very painful period for you. If you are here to stay the course, if you are here to build generational wealth and really change, your future finances, then you want to be in it for the long run, right? Then you really don't care intra-year what Bitcoin does, because you're investing over a 5-10 year horizon, and you're looking as this to be the antithesis of the traditional finance markets, which, by the way, continue to show their weaknesses, right? The traditional finance market is not shining itself in glory. This is all due to the traditional finance market. Let's see who we got in here. Shoaib, good to see you. Nasser, good to see you joining me on this painful red day. Shane as well. Yemi, support us. Alexi, it's good to see who is here and who is not leaving, because the reality is, and this is why I wanted to do this stream with you, even though I had some other stuff to do this morning, and our normal video will come out later after the jobs figure. I will post that video after the jobs figure. Once we got that data, once I've digested it, I will bring it to you so you guys know what's happening. But I wanted to sit here because the reality is the Moon Boys won. Why did I start this channel? I started this channel to be because there was too many Moon Boys out there being very sensationalist, telling you Bitcoin's going to zero, telling you Bitcoin's going to 100,000, and there was no rationality in between. And I could see a lot of retail traders were getting wrecked. Right? So that is the reason for this channel. So I'm not going to just come on when the market's all fun and frothy in January and make videos. There are plenty of YouTubers who did that. You couldn't see them through the bear market. As soon as Bitcoin was pumping 10% in a day, they made a video and they were farming for views. I'll sit here with you guys as this is down 4%, as we're breaking structure, as we create this lower low here on the chart, and we'll navigate this and look at where support is. Now, speaking of support, doesn't seem existent, right? We broke this low from here. We came back down here. You'd hope for 20,000 to support. No, the psychological support didn't hold. Now you look to the bottom of the channel at 18,750. Okay, remember the channel, our trusted channel? We didn't hope we will come back in here, but we have. We got rejected twice now from 25,000, and we're coming back into our channel. Now, you cannot rule out 18,700. This is a very important level. When we last fell from 25, it took us up to 18,700 to stabilize. We worked our way back up to 21, 22 range, and then we got judded down here in November, thanks to Sam, Bankman-Fried, and FTX. Okay, so that's what we need to look at. Now, a lot of people are asking me, can we get to some of those painful levels? My view on this is changing day by day. First, I was thinking it's hyper unlikely, and I still think it's unlikely, but we're starting. Remember I said yesterday, There has to be a certain concoction of events resulting in collapses of companies. We're starting to see that, guys. We are getting a horrible recipe of ingredients that could lead to painful periods for crypto. Now that gets me a little bit excited, because to me it made me go, hang on, will we get that 15,000? Will we get 16, 17,000? Potentially, it's in play. And for me, I'll be ready with limit orders, ready to dollar cost average into those, because that's where my conviction sits. Of course, you need to do your own research and see where you sit with that. But I do want to share this chart pattern as well with you guys. I was sharing this on a video over the last couple of days. We were in this channel, we created a double top pattern, we broke, look at the price target I set, guys. The price target I set was 19,300. We're just shy of our price target. Now support will come in at the bottom of this channel. The question is going to be around this 19,000 level. How strong will this support be? That's what we need to understand. How strong will this support be? Will we be able to navigate this, bounce off of it, and go work our way to the top of the channel? Or is it going to be a painful fall back to some lows? That's what we need to look out for. Now, what's going to determine that or not is the macroeconomy, right? It's the macroeconomy. And first and foremost, what do we want to look at? There's a bunch. You guys can take your pick. Where do you want to look? Do you want to look at the fact that the New York Attorney General alleges that Ethereum is now a security and they file a lawsuit against KuCoin? Is that where we want to start? Right? Plummets the KuCoin token, right? Incidentally, I will fill you in on this. The KuCoin token plunged all the way down to a low of $1.23, but now it's stabilizing back at $3.77. That's partly, in fact, to Justin Sun over at Tron, who completes a $100 million USDC transfer to create liquidity for Huobi. Now, look, Justin Sun always does this. He wants to jump in the headlines anytime somebody's struggling to try act like he's going to save them. The sad side of the story is anytime he has done that, the company's not really survived. I mean, I remember he said the same for Terra Luna. He was saying similar things for FTX, and I'm going to save. He wants to be the savior, but normally it doesn't really last. Now, you know, is this a little bit of an overreaction based on what the New York State Attorney General is saying? Perhaps, but it's worrying, right? It's further evidence that the US are tightening their claws around crypto. Speaking of which, Biden proposes 30% tax on crypto mining electricity usage. Yeah, I'm not kidding, guys. Look, take a look at this. This is what he said in his proposal. Any firm using computing resources, whether owned by the firm or leased from others, to mine digital assets would be subject to an excise tax equal to 30% of the cost of electricity used in digital asset mining. Insane. Firms engaged in digital asset mining would be required to report the amount and type of electricity used, as well as the value of that electricity. They are squeezing from all sides. On the one side, SEC, you do your thing over there. Go after stable coins on the other side. They hit Paxos with the BUSD. They jabbed KuCoin on this side. They've gone for a right hook over on the mining usage with tax. They are not messing about, but guess what? That's when I love it, guys. When countries want to ban crypto, that's when crypto shows its strength. When inflation is out of control and the finance markets are struggling for liquidity, that is where Bitcoin's going to rise like a phoenix. Bitcoin doesn't do well in normal environments. Bitcoin is a defensive type asset class, right? It's going to do well when people realize we need an alternative. Governments are overstepping, they're overreaching, the inflation's out of control. That's when you see Bitcoin really start to rise from the phoenix, when everybody is doubting it. And speaking of which, look at the fear and greed index plummets from just last month sitting in the 60s to now 34. We're now officially back into fear, which gets me rolling up my sleeves because that's when I need to start doing some work. So I've put in my DCA hat on. I'm getting ready for opportunities. I'm not going to FOMO in. I'm going to nibble. You guys know my strategy for DCAing. If you've not, I posted a short about it. I think yesterday I posted that short. Go check it out. Getting ready to do some nibbling. Of course, we need to touch upon, before I jump into the questions here to see if you guys have any interesting questions for me, drop those in there and I will jump over there shortly. Silicon Valley Bank struggling spell further trouble for beleaguered tech startup market. Now, this is obviously one of the narratives causing a lot of the pain right now in the market. And like I said, it stepped beyond crypto. We had Silvergate, which was one of the biggest crypto banks out there, of course, file for liquidation. Now you've got Silicon Valley Bank, one of the biggest, around for like 30, 40 years, banking plays for the tech startup world, now struggling. They had to go ahead and do a fire sale of their security. So they unloaded $21 billion worth at a $1.8 billion loss and raised $500 million from venture firm General Atlantic. Okay, so they're in a painful position right now. And again, they're suffering from the risk off mindset. As risk rotates off, it's bad for tech companies, it's bad for crypto. That's why crypto's struggling. Crypto firms are struggling. That's why you're seeing now this spread to Silicon Valley Bank, because deal activity is reduced, right? There's been no deal activity over last year. It sank over 30% to 238 billion. So they're all suffering from this fall in liquidity. Same for crypto. As Bitcoin takes its next journey to the downside, the worrying thing is who else is going to suffer? There were so many companies in the crypto space. I don't know who, right? We don't know who. But when Bitcoin's at 25,000, they can breathe. Their head's just about above water and they're fine. Now that Bitcoin's at 19, their finance guys are going to be nervous. They're going to be nervous and worried. And as you get to 18, maybe they'll start struggling and we'll see some smoke around some of the issues they're facing. If we fall down to 17 and a half, maybe we could see some other liquidity events struggling with some other players in a bit of a pickle. Now, what you hope is the case is that if these companies have survived through Bitcoin being here at 15,500, you hope they should be okay. But it's not just about how low Bitcoin goes, it's for how long Bitcoin stays there. So a lot of companies, we heard that from FTX as well. One of the reasons FTX unwound and we eventually caught Sam Bankman-Fried in all his fraud was because the bear market was so long and pronounced and painful. Now, I would have argued if you're SBF, you should have known that because the crypto cycles are always like that. But you can see here, if this continues and we fall back to 15,500 again, companies could be getting called out and that could create a bit more of a violent loop. Just to wrap up, guys, you are obviously seeing altcoins getting wiped out. No point me sitting there looking at some altcoins. More important to look at here is the dollar index. Is the US 10-year here. Notching down slightly, but the intraday it's climbing. So on the daily chart, you can see it's having a bit of a down day of 1%, but it's still sitting at 3.866. Dollar index, again, I just want to remind you, it's above its EMA ribbon. And speaking of EMA ribbon, let's come back to Bitcoin. What do we see here on the EMA ribbon? You can see that there is pain, right? On the daily chart, we have super lost our daily EMA ribbon, but what's more worrying is this, right? Something I've been shouting about for a very long time. And I do want to cover this off as well. A lot of people are like, oh, El Capo was right. All the perma bears were right. No, it doesn't work like that. It doesn't work that the perma bulls are right when the market's going up and the perma bears are right when the market's going down. No, both of them are wrong. Right? The people in the camp who was like, this is going to the moon, they're wrong. The ones who kept putting hammer on Twitter every 2 minutes and saying this market's going down, they're wrong as well, because they missed from 15,500 all the way up to 25,000. So you do not want to be a sensationalist. You want to be in the market, you want to be rational. And that is what I said to you guys. When this rally started, I said, enjoy the rally, be smart in the rally, but understand that we're running into our EMA ribbon and we are still in the grasp of the bears. And that is exactly what played out. Now, long term, how do we get out of this mess? From a technical perspective, you have to create a higher low. Bitcoin has to put in the work. Is that work going to be around 18,000, 18,500? Build some support for a long couple of weeks and then work its way back up. How is it going to do that? It's not going to do that miraculously. We're going to need positive data. We're going to need good data to come out to help us do exactly that. And it starts off today with the non-farm payrolls, expected to come in at 205,000 versus the 517,000 non-farm payrolls created in the previous month. This is a horrible number, 517. So if we get more than 205 and significantly more than 205, continue to expect pain in this market. More pain, 50 basis points happening, etc., etc. Don't forget, we've also got the CPI next week and the PPI. That's then what we look towards. If we can get good non-farm payroll figures today, if we can get good CPI and good PPI, then we can start getting out of this mess. But the problem we have is that even Jerome Powell himself is saying, nah, I don't think we're going to get good data. And that's the problem here in this market, is the market has already gone ahead and priced in. Now, what's interesting, which I do want to share with you guys, is there has been a change in this overnight. And what you've seen here is now 55% are pricing in 50 base points. I'm not sure what's causing this. I'm going to give this a refresh as well. I'm not sure what's causing this. 56% here of the market pricing in 50 basis points. This was as high as 80%. So we're seeing more pain in the market, but at the same time, it's a bit odd. Let's take a look here at the pre-market as well before I promise to jump over to your questions. Just so much to share with you guys here on this painful morning. We've got NASDAQ flat, S&P flat, Dow Jones flat. Right, they're all waiting for the jobs figures so we can leave that there. Cool, let's see what you guys have over here in the questions. Alexis, hey brother, hope you're doing well. I'm good, thank you. Yemi says, my portfolio is dying, but I'm not leaving. Nasa says, DCA time. Shoaib says, 2023 is back on 2022 levels. Kuna says, excellent bro, respect your conviction. I'm here to stay as well, but it's a bad market. Dude, this can get really bad. And I think this is what people are not understanding. Like, when I say it can get really bad, I was around in the 2008 financial crisis. I was very young, but I was around in my early days in traditional finance. And what I remember there was the financial crisis creating a liquidity crisis with contagion. Now, I'm really hoping that this time is different, but I'm getting the same vibes. I'm getting the same vibes where we kind of need a few big pain points to kind of come out before we get out of this. And I don't mean crypto. I mean, there could be a big name that gets wiped out in the traditional finance world before we call the bottom and start working our way through this. And that's part of the problem we've got right now, is this could be getting quite bad. And I don't just mean US. I mean, this contagion. I mean, if you come over here to CNBC, European banking stocks sink. UK banking stocks are struggling as well, right? This is painful. And incidentally, that's where we used to work, over there in Canary Wharf. Very good times. Cool. Okay, so let's see what else we got here. Abdurrahman, bro, please upload this live as a video later. Computer, hell yeah, more DCA from me. Digital D says, good morning, all. Crypto is present now. This is not Crypto Banter. We don't do stuff like that. Tina's, hey man, in a maniac short from 1.16, so I'm smiling. Any idea how far Phantom might fall? I'm a moon boy regardless. Tina says, Matic short. Shoaib, can this be planned? FUD, and when the data is released, it'll be neutral. Good point. So this, I don't think it's planned FUD. That's not the case. I think what we have got going on is attack on crypto, right? Left and right. On top of that, you've got the banking stuff happening in the traditional finance world. That's going to be a problem, right? Don't be surprised to see Credit Suisse saying they're struggling with something else. Don't be surprised to see somebody else struggling as well. But we have to talk about this. If non-farm payrolls and CPI, PPI come out decent, this could all unwind quite quickly. We could have another pump. Now, what you need to be careful of is if we have another move here on Bitcoin back to the upside, you do not want to get caught. You do not want to get caught in a trap as it starts rotating to then just get thrown back again, okay? So that's where you need to be very careful. The market's perfect at shaking people out. It'll shake you out here to the downside, and it'll look like it's going back up, everybody gets excited, and boom, it goes back down again. So be very, very careful. Don't, this whole market's going to be 1 foot in, 1 foot out, start, stop, start, stop. It's going to be painful, and it's designed to liquidate you and take your funds. Let's see what else we got here. Supporter says, still here and will be here in 2025 when we collect some rewards. Love the mindset. That is the right mindset. And sometimes it's good to have that mindset just to remind you of the bigger picture. What do you think on Phantom? Can we get price targets for Phantom, Cadena, Link, ETH, Gala? Not right now. Many reality collapses and FUDs. Shoaib, when it can bounce from 16K to 25K, it will go again back upwards. A few weeks ago, people were crying, saying they wish the market came down. Yeah, this is the market. You hit the nail on the head, NASA. With the crypto markets, nobody is ever happy. And that's the point, right? Do not go off the sentiment of crypto Twitter, of YouTube, of anyone. Just go over the sentiment of your portfolio and your conviction. Because when the markets are booming, nobody's ever happy. I know this. I would tell you, in the bull market, nobody's ever happy. Because when the Bitcoin got to 69, everybody was waiting for 100, 200. Because they've already FOMO'd everybody's mind to expect 150, 200. So you just have inflated expectations. So what you need to do is make sure you preserve your own portfolio. If you're happy, take profits. If you're sad, cut your losses, right? That's where you go. You've got to manage your portfolio. And when the markets are moving up, people are like, oh, I wish it dumped. And when the market's dumping, oh, I want some green in my portfolio, right? That's why you've got to separate your emotions and just keep it level-headed. Dylan says, CME gap and 9K needs filling. Who's going to be buying it? Do you think stablecoins are safe? I've made a video on stablecoins. Definitely go watch that. Type in stablecoins on the channel. I break down. Short answer is none of them are ideal. It's a necessary evil. Use them when you need to and diversify as best as possible. We had metaverse hype before. Will AI coins lead the change in this current market? Absolutely not. No. Those projects, metaverse, AI, people were just creating hype out of hype. Like, we hadn't got our feet underneath us, and then on top of that, people are trying to load up on AI plays and DJ plays. It just never made sense to me. Even our course member live stream, I kept saying to the guys, I was like, guys, like, we're still in a mess right here. Inflation's still high. We need to figure this out. I'm eating my veg. Bitcoin, Ethereum, layer one's fine, but I'm not going into DJ plays. There's plenty of time for that. Those are plays that do well in bull markets. Right? That's why I didn't believe it. When that FOMO money came in and we saw the AI pump, like, I just didn't trust it. And you can see how those are doing now. They're getting absolutely wiped because we haven't got our feet under us. Let's get our feet under us. Let's get out of this mess that is inflation. Let's get our landing if we're going to get a landing. If we're going to have a crash landing, fine, so be it. Let's have a recession. Let's buy the dip. Let's spend a couple of quarters in recession and let's work our way through it. Enough is enough. Let's get on with it. That's what the market's saying, right? Jerome Powell, do what you need to do. You could have done this already. You could have raised rates a lot long ago. We could have had our recession by now, and we could have bought the dip. and we could have been ready to go through good times again. So just get on with it. Instead, you're just messing around. Oh, I'm going to land this plane so nice and gently. Oh no, we need to go around. No, I messed it up again. Like, it's annoying. Just land the plane. If it's going to be a bumpy one, we're going to hit the tarmac. Fine, we'll pick up our bags, we'll climb out, and on we'll go. Cool. All right, guys. I think we're going to leave that there. I will be covering off the non-farm payrolls. I'm not going to do it live because the problem with live is you need to digest that information. So I will be making a short video for you guys, about 8 minutes long or so, covering off the non-farm payrolls and what that means for the market. But right now, guys, it's painful. It's painful. Stay the course. Don't get FOMO'd. Don't panic. Right? Panicking is the worst. And again, there'll be people watching right now who bought in here at 25 and they're going to sell here at 19. You're doing the game wrong. You're doing it opposite. You need to be buying in the dips when it's painful, when it feels like this, right? And it could get worse. This feeling could get worse. And then when it rips and everyone's excited, telling you Bitcoin's going to go to 50,000, that's where chances are it won't. Hopefully you got a crash course over just the last 6 or 7 weeks of what this crypto market is capable of. Long story short, people are still panicking over what is ultimately this. If we go from swing low to swing high, here, we are retracing down here to about this level, just past the 50% level from where we've been from bottom to top, right? Not the end of the world. You've gone from here up to here. Do you expect it to just happen in one go, right? That's a decent move. So to have a little bit of retracement before then trying to have your next move, that's okay. But what is right to panic you is not the price action, it's what's going on in the market. It's the fundamental things of the US going after crypto, the issues we're having with the banks, and inflation not being under control, labor market still heated. That is supposed to worry. Okay, so that's normal. That's something we need to navigate. Crypto's been through worse before, and we'll navigate through this as well. So to summarize, we're not leaving, or I'm not leaving. Let me know in the comments as we leave this live stream if you're leaving or not leaving. Smash up likes, make sure you share this video, and then look out for my video later on today. As always, if you want to learn TA, now is the time to be learning. When the market's doing nothing is when you need to be learning. And I put my TA course out for free. What other YouTubers put out a TA course for free, guys? And first of all, what other YouTuber has learned professionally TA, not from their bedroom, learned professionally from investment banks, right? I went through the training over 10 years, right? And then put it together for free for you in one package for you with one link. Go use it. Like, why are you procrastinating? Then you're going to make excuses of why you lost money, or you're going to be that person that says, oh, my portfolio's down and I panic sold. Just go learn. Go learn. It's a couple of hours course. It's free. I'm not charging you thousands of dollars for it. It won't be free forever. Like, I don't know. What is stopping you from learning? If you're taking this thing seriously, learn. Right. Enough ranting. Clearly I'm upset. I need a coffee. And I'll see you